Okay everyone, welcome back to the Price Action Labs YouTube channel. So here we're going to be going over supply and demand using the footprint charts, right? So I've had so many questions about volume delta, how I can use the volume profile to predict accurate supply and demand zones using order flow footprint charts on the ATAS platform. So with that being said, let's dive into it, right? So we have the ATAS platform at the top and we're going to be focusing on supply zones and demand zones, right? How can you actually predict what is going to go on inside of these zones? So let's break this down. So if we just take a look at on the left hand side, right, we have a supply area in red. So you need to understand a couple of things, right? So when you trade, you want to have less rules, not more rules, right? So this is something I call the triple X model. So what is the triple X model, right? So the triple X model refers to three things, right? So the triple X model refers to you need to know where to trade from, what to look for, and why you are looking for it. Three basic things. So every trade you take needs to be run ruthlessly through the algorithm, through the triple X algorithm. You need to know where to trade from, what to look for, and why you're looking for it. So if I were to break this down even more simple for the SMC ICT traders or just generally anyone, you're looking for a key level, right? You're looking for a key level to trade from. You're looking for price to enter the key level. So you're looking for an entry. Then you're confirming everything with the order flow, right? So I'm just going to write OF, right? Order flow. And that's what we're going to be going over. So when you're taking a trade from an order block or a supply area or a demand area, say this is a supply area over here, right? You need to understand how a supply area forms, right? And this comes from the order flow. So once you have your key level, it could be a fair value gap, a breaker, an order block, whatever you want to call it, right? Once you have a key level, you're looking for price to enter your key level. So you're looking for these entry spots over here, and you want to use the order flow to determine whether it is a supply zone or a demand zone, right? So the spoiler alert here is you have no idea price is going to break higher or lower, in this case lower, if you don't actually read the order flow, right? Vice versa here for a demand area. If we just take a look at our demand area over here, how does it actually work, right? So a demand area, if I label this D, right, you're looking for the same things. You're looking for a key level, that's number one. You're looking for an entry inside of this key level, and you're confirming everything with the order flow. So the reason you want to be buying here and buying here is because you're seeing a demand in the price, right? You are seeing buyers in control. Now, with that being said, if we just go over to the S&P 500 futures chart from the 2nd of July, right? I'm just going to be breaking down to traders how I kind of take this, how I kind of approach this day, right? So this trade I took. So what we can see right off the bat is we see our Asian session, right? So this is what I call a two-phase manipulation model, right? It's one of my favorite manipulation models to trade, right? So what we can see is I always want to focus on how price is behaving near the Asian range, right? So remember we have our triple X model over here. So just keep this in your head, everyone. It's the triple X model. And so the triple X model, the reason I like it is because it's straightforward to learn, right? And it's simple. So you want to know where to trade from. So how do we determine where to trade from? How do we determine our key level? So this is how we do it, right? We are looking for a 15-minute fair value gap, right? I'm going to dive into which 15-minute fair value gap this was, right? So this is the 15-minute fair value gap over here, right? So we can see this candle and this candle. We have a gap in this candle. So I'm going to label that in blue so traders can understand. This is the 15-minute fair value gap. Now, I often get questions about my point of interest, right? So I don't trade directly inside of the fair value gap. I use the fair value gap to dictate where my key levels are going to be, right? Where are my supply and demand zones? So in this case, the way I do it in this case and every other case is I take the candle before the fair value gap, right? So if you have any doubts on this, just drop any comments below. I'll be more than happy to answer any questions on this. This is my fair value gap, right? This is my point of interest, right? This is the fair value gap. This is my point of interest. Now, a couple of things about this point of interest I want traders to understand, right? I call this a two-phase manipulation model. So the reason I call it a two-phase manipulation model is because price manipulates both sides of the Asian range. It is a two-phase manipulation model. So what we can see over here is first we see the previous day high being swept, and we also have the Asian range high being swept. So this is what we call buy-side manipulation, right? We have taken out liquidity to the upside. Now, we've taken out buy-side liquidity early in the London session. I believe this was 8 a.m. UK time, so 3 a.m. EST. Now we take out the Asian low, right? So we take out the Asian high, then we take out the Asian low before heading higher. So you want to ask yourself what this means, right? From a liquidity perspective. So from a liquidity perspective, when you see this, the way I like to frame it in my head is that we see a manipulation over here. So this is what we call manipulation phase 1. I'm just going to write M1, manipulation phase 1. This is buyers being enticed, right? Those buyers get stopped out, they get manipulated out, right? This is when we have manipulation phase 2. So we've taken out sell side liquidity in the form of the Asian range low. So this is going to be manipulation phase 2. So once we have manipulation phase 1 and manipulation phase 2, we are simply waiting for price to come into this fair value gap. So this is where step number 2 comes in, right? We're looking for what? So the what is often the most simplest thing we're looking for. We are looking for price to give us a POI and to enter this POI, to enter this key level after we've seen our manipulation models, right? It's that simple. So once you have that in place, right, that's going to be our step 2. So let me bring that back. So once we have step 2, we are waiting on the lower time frames for price to enter this area. So now we see price entering this area, right? We see price heading higher, right? So when we come into this area, we see price beginning to break above this level, right? So break and retest, right? Break and retest is as simple as it looks, right? So a break and retest is basically this. We want to see price break and we want to see price retest before heading higher. So we're looking at price action here, we're looking at price action here, and this is where the why comes in, right? So what is going on inside of this key level? So let's just play price on a little bit. So we have a break above this level. Now we have the retest, and this is where the order flow and the ATAS platform becomes very handy, right? So we are going to be looking at this on the ATAS platform. So if we just kind of play price back a little bit, we had this kind of area over here. So let me just get this up on the ATAS platform. So on the ATAS platform, we had the same exact key level, just resting over here. So we want to understand, if I take this down to a 5-minute chart, we want to understand what was going on in this region, right? And we want to understand what was going on beyond the regular candlestick chart, right? So let's take a look. This same fair value gap, we see price breaking above and then retesting. So this is going to be the retest area I want traders to understand, right? So let's kind of bring this side by side. So we see a large drop to the downside. So when we see a retest, right, we want to see what's going on between the buyers and the sellers. So notice how we see price filling the fair value gap before heading higher. So this is our first kind of break and retest. So we want to understand what was going on over here, right? So let's kind of bring up the ATAS platform. So this is the same chart you see over here, right? So what we can see is we see a large amount of aggressive sellers and we see a large amount of aggressive sellers. What's interesting on the ATAS platform, if we just look at this candle over here, if we kind of dive into it, is this. We can see we have a green candle. We see price moving higher with a green candle. So we see bullish activity. But despite seeing the bullish activity, we see an accurate retest over here. So this was the retest that corresponds to this area. This means that aggressive sellers failed. And the reason I know aggressive sellers failed is because we can see the negative delta. So a very quick summary of what we see over here. We have a green candle with lots of negative delta. So we see 77 for 0, right? So what does that 77 for 0 actually mean, right? The most interesting thing I think with trading is understanding what is going on behind the candles, right? How can you use order flow, volume, and delta footprint charts to give you an accurate indication to a true break and retest? So 77 for 0, right? So the left number, in this case 77, represents the total number of aggressive sellers. The 0 represents a total number of aggressive buyers. So here on ES, this is roughly, traders can go and back test. So 62.53, 62.54. Round about this area of 62.53, we see a large number of aggressive sellers. This simply means that there were more aggressive sellers than buyers. So if you look at all these aggressive sellers here, were they rewarded, right? Do we see those sellers breaking below the zone? Well, quite obviously we don't, because we see price breaking above with a body, right, on the 5-minute and on the 1-minute chart. So this tells us one thing. This tells us there's been an absorption of sellers, right? There's been an absorption of sellers, right? Aggressive sellers have failed. So what this shows you at this price is that the sellers at this price have been rejected, right? They've been absorbed. So the question is, who have they been absorbed by? Have they been absorbed by the aggressive buyers? Well, not really, because there's no aggressive buyers. So imagine if there's no aggressive buyers and the market moves higher. That's telling you that there's some kind of a mysterious force that's driving price higher, despite the order flow footprint charts actually telling us that there's more aggressive sellers than buyers. So what's going on here is that the aggressive sellers are being absorbed by the passive buyers. And so that is the key fundamental. So what you want to understand from a break and retest, the only reason The only reason a break and retest holds, the only reason we get price breaking, retesting, and holding in this case is that we have a true demand area. We have a true demand area. So what was going on inside of a true demand area? So what we can see is we can see a few things, right? We can see aggressive sellers, right? Let me spell that right. We can see aggressive sellers failing, right? So we see a failure of aggressive sellers. And we can see that because the bid is a lot greater than the ask, right? So that's what we see kind of over here in this region. We can see 77 for 0. And we can also see 195 for 15. So we are seeing a negative delta. We are seeing the sellers being absorbed. This here is an absorption. So when you're trading a fair value gap, a demand area, right? What you're looking for is you're looking for sellers to be absorbed in this region, right? This is how a break and retest actually works, right? For you to see higher prices, you're looking for an absorption of sellers, primarily at a 15-minute fair value gap. Also filling in a 1-minute fair value gap adds confirmation to your entry. So if we just continue to play price on, we can see our second retest coming into this 15-minute fair value gap. Now we want to understand what's going on over here for us to take this market long. So what's going on inside of this region? This is now the second official retest. So let's kind of bring up our footprint charts, our ATAS again, and see what was going on. Here's our first initial rejection, right? So what we're seeing is we are seeing this. We are seeing 210 for 90. We're seeing 192 for 32. So we're seeing a huge amount of aggressive sellers compared to the aggressive buyers. This is over a 2x difference. This is over, I think, a 5, 6, 7x difference, right? So we are seeing a large number of aggressive sellers. So we've seen a rejection over here. So already we know that the market is actually in control. Buyers, right? Buyers are in control, right? The reason we know that is because we see an absorption of aggressive sellers, which means by default, passive sellers are in control, right? So the only reason a fair value gap holds, the only reason a breaker or a demand area holds is because we see passive buyers in control of the market. Now, these passive buyers prop up over here, right? The reason why is because we can see price rejecting and heading higher. So this could be your first potential trade, right? Just over here. So to give you some confluence to this, we see price rejecting off for 1 minute and we see passive buyers over here. We see passive buyers over here. One other thing I want to see is I see a lot of people talking about volume profile. So the volume indicator on TradingView is pretty much lagging. What you want to understand about volume is this, right? So please take notes on this. When you see a 0 on one side, right? You see 90 for 0, you see 77 for 0. So you see 2 0 prints, right? So what do the 0 prints represent, right? When you see a 0 print, right? This means that there's no aggressive, in this case, buyers, which means that the auction between buyers and sellers have been wiped out, right? There's no aggressive buyers at all, right? Which means by default, if you define volume is just the bid and the asks, right? It's the total number of transactions at that price. When you see a 0, that means by default the volume has decreased, the auction has been wiped out. There is no auction between the buyers and the sellers. Now, with that being said, when you see a 0, this increases the likelihood of a reversal, and therefore you can put your stop loss comfortably just above this area. So if you are taking a long position off this fair value gap, you can have your stop loss just above this area over here, right? This gives us confidence in taking a buy position from here and having a stop loss over here because we know that buyers are in control and the auction has been wiped out. There is no more trading over here because we can see the 0 print. Now, if we just play price on, we get our first overall rejection to the upside. Now we see price coming and hitting our zone again. So when this happens, there's obviously two things that can happen. We're looking again for the same price action. We want to see what was going on inside of this region, right? Before potentially taking a second trade, right? So this is a trade I took on ES, and you can have your stop loss just, above this area. So sorry, just above this area over here. So what happened in the second region, right? What happened over here? So if I just go to the Discord for 1 second, when you're trading, you need to understand who's in control of the price. So if I just kind of bring my Discord over here, we just kind of go through the trade. So this trade itself was taken at slightly outside of my hours, so about 9 minutes after my hours. So I usually stop trading at around 11:30 a.m. Eastern. This was the trade itself, right? Scalp trade off this area, targeting the next fair value gap above, right? So this was the ATAS entry. All right, just under $300 profit for the day. Low risk outside of my session times. Now look at that 134 for 0. So my entry was just over here. Look at that 134 for 0. It's the same concept again, right? 134 for 0 just at this fair value gap. 134 aggressive sellers, and we see the market moving higher. We see a 0 print and a 0 print. So what's happening is we see the volume decreasing to the downside. We see massive aggressive sellers failing 3 times to break below the level, right? This is what confirms your fair value gaps, and this is why the market moves higher. Right, so that's exactly what happened over here. So we see price hitting the target, you know, a bit of a choppy one. So we had price kind of retesting here, retesting here, retesting here, retesting here again, right? So what does a retest actually mean, right? So a retest is what you see on the ATAS platform, right? So if we see price eventually shooting up in our direction, a couple of scalp trades you could have taken here. So the ATAS platform gives you an overall understanding of what makes a supply zone, right? Sorry, a demand zone in this case. A demand zone is when aggressive sellers fail, aggressive sellers fail, aggressive sellers fail. And the beauty of the ATAS platform is that it gives you the delta, and it gives you something called delta outliers. Delta outliers give you significant differences between the ask and the bid. So the reason you see a lot of red over here is because you can see more aggressive sellers than buyers. If it was a blue delta, like you see over here, 3 for 100, there's more aggressive buyers. So it's almost a color-coded way to see who is aggressive and therefore who is passive and therefore who is in control, right? Very important to understand. So we're just going to sum up this video for a demand area. This is a demand area video, and I just want to sum up what happens, right? So it's very simple when you understand what you're looking for. So you need to know where to trade from. So you're looking for a fair value gap entry, right? So FVG entry. Then you're looking for price to enter. So you're looking for a fair value gap. You're looking for price to enter. And what you're looking for is you're looking for, in this case, aggressive. I'm just going to write AGG. You're looking for aggressive sellers to fail. You're looking for aggressive sellers to fail.